How's everyone doing? My name is Rob Ellis with Horizontal Land Partners and our HLP fund, Gulf Coast Equity Fund. Today we're going to be reviewing a record-breaking mobile home park. This is exactly what we're looking to do. About 100 acres is the minimum purchase you want to make. We were looking at sites down here in Florida between 800 acres and maybe down to like 200 acres. And the land costs are typically under $10,000 an acre. One of the big problems here was environmental, all sorts of just regulatory issues, municipalities. So this is the closest you will ever find to institutional entitlements, and you will see why. So we're just going to get right into it. This is one of the announcements. New Texas RV Park plans 2,300 plus sites on 148 acres. An RV park has more than 2,300 lots, is under development in Taylor County, Texas, according to KTAB. During a meeting on Tuesday, September 23rd, that's a month ago, Taylor County Commissioners approved a final IDP, Infrastructure Development Plan, for the Elmwood RV Park, which will be located off Elmwood Road North and Mesquite Lane. The park will house 2,313 RV spots on 148 acres. That's about 17 units an acre. In addition to the RV park, it will have a playground, dog park, and volleyball area, and an office and clubhouse. Yahoo News tends to report a little bit worse. It says adds housing. Whoever Mariah Williams is a month late, and it's not housing. This is an industrial zoned property, manufacturing. Actually, they didn't even change it. This is an ag use. They didn't even have to rezone it because it is unincorporated, which is exactly how we would buy. Developments are continuing for one of the largest RV parks in Abilene. It is a new housing option as data center projects continue to come to the big country. Elmwood RV Park is catering to workers for the Shackelford Data Center, which will soon be built. The RV park has started construction, and next door neighbor Sammy is just not happy. My son said I'd love it. He was right. I do, because it's so peaceful and quiet, but we're not going to be quiet when the RV park is next door. You know what the best part about unincorporated areas and great attorneys and great engineering is? That you don't have to worry about neighbors like this. Okay. They have some pictures of what that's looking like. Here's the clearing. Here's the engineering plan. It shows where it's going to be. This shows the proposed lift station. Some of the other ones proposed HDPE. That's the piping. And some of the water extensions. For a development this size, you could also look at private utilities. One of the things that municipalities can get over you is if you tap into city utilities that can require sometimes, or if they want to annex out, they can try to ask you to try to come in there. So by tapping into public utilities, you typically are at the mercy of the municipalities, which is why we pushed private systems. Tuesday morning, Taylor County Commissioners approved a speed limit change. Okay, so we're going to pass on that one. Here's another one that talks about it. This is the third press from RV Pro. An RV park, 2,300 lots, is under development in Taylor County. This was about a month ago, according to the report from Big Country homepage, which again isn't really a news press article. You could have found these from public hearings. Again, I don't know who this one is, but they could find better sources. Taylor County Commissioners approved a final infrastructure development plan. That's an IDP for Elmdale RV Park, which will be located off of Elmdale Road in Mesquite. The park will house 2,313 RV spots, 148 acres, 24 feet by 55 feet with pad sizes 12 by 47. Utilities will be provided by Hamdy Water. Now, you could have done a well, several private wells, Taylor County Electric, and City of Abilene Sewer. Now, for a large enough development, what you see down here in Florida, 10,000 acre developments, 20,000 acre developments, anything over really 200, 300 acres, or a density like this, you really can just do anything with your own utilities. So, in addition to the RV, the park will feature playgrounds, dog parks, and volleyball. It will also be ADA compliant. Here's the last coverage, and then I'm going to show you guys the actual video so you can see how fast this published. An RV park with more than 2,300 spots. This is the source they quoted in development. During a meeting on Tuesday, Taylor County Commissioners approved a final infrastructure development plan, blah, blah, blah. Utilities will be provided by Hamley Electric, Taylor County. In addition, the park will also comply, so nothing new. Now, this is their website. Elmdale RV Park is currently under construction with an anticipated December 1st phasing open date. So you're talking from when they first presented this in August, and I'll show you the preliminary plan. and they will open within 3 months. And this is a property that should be worth over $50 million. The appraised value, the assessed value is less than 500 grand, which is a huge uplift on the entitlements. The park will serve those who will be working on the Frontier Data Center. They couldn't even spell a data center right. Located in southwest Shackleford County, only 4 miles from here. If you will be working, fill out the application and we will be in touch with you. This is what it looks like. Nothing special. Here's the data center. $675 monthly rentals, which is about what lot rents go for. This is temporary housing for construction workers. Big things are happening in Abilene. Frontier, the new data center campus will be developed by Vantage Data Centers and built by TIC. The industrial company is bringing thousands of new jobs. What you see here is manufacturing leading the pack, which is exactly where I'm from in Ohio. Manufacturing always led it in Licking County, Pickaway County, in massive data centers. So these are first market entries. I would say that this county is pretty depressed compared to, it's got data centers and some jobs, but I wouldn't call those the same as where we're looking at in Henderson County. So it's bringing thousands of jobs to the area, whether you're a construction crew or a long-term team member, location and convenience, and that's why we're here. Convenient place to stay. It's located purpose-built for long-term workers, 2,300 spaces, full hookups at every site, high-speed fiber and Wi-Fi, on-site laundry to save you trips, on-site workout facilities, ample parking for trucks and work vehicles, 24/7 security and well-lit grounds, community areas for relaxing off the clock, including pickleball courts, grills, and playgrounds. So they're putting in nice amenities, which is what a lot of these communities want to see. You can see the map here, which says here's the data center, here's the RV park. And this is the area where they had to get approvals in Abilene. They are inside of what I believe is an ETJ, which means they have a little bit of scrutiny, and they're also tapping into public utilities. Typically, data centers have to still tap into utilities as well, so you can see that the utilities were here along 351, and that's what drove it. When we do entitlements, we don't look for, I would look for industry as well. This isn't a bad area, but it's still a little light for what we would be looking for. We try to look for a mixed use. So that's the example. Multiple demographics. Are there jobs? Are there workers? I think it qualifies under the data center over here. It shows some of the data center, talks about some of those. Now, you could do this a lot better. You could do this with industrial. This has all the parks. This is a site plan now. This is a very simple site plan. They don't even have 3D renderings. This is like a very low-end website. And it talks about the zoo and some other things like that. So now I'm going to show you guys what happens. This is the hearing. And this land is post-entitlement on 2,300 pads, minimum 2,000. 2,000 a, that's just based on my experience. 2,000 a pad, that's 4 million. That's 4 million. 2,000 times 2,000, you could do the math, which means in 4 minutes, right here, you can hear a guy in the background talking a little bit when we talk here. This guy's the commissioner. This is an engineering group. This is the final approvals. They had a preliminary hearing, and I'll walk you through what the preliminary hearings look like. But you guys saw a little bit of the map here, but this is unbelievable. And this is the difference between arguing and what we used to do, buying in municipalities and incorporated areas and doing what you want in unincorporated areas with little oversight, with just minimum engineering. There's no pushback. There's not really a way to decline. There's no rezoning applications. It's just an engineering. This is a one parcel. It's kept as one parcel. Actually, it's a 2 parcel visit, but this is exactly what it is. Here we go.
Thank you. And basically what we're asked to do is consider approval of the final infrastructure development plan, or the IDP, for Elmdale RV Park, which is located in Precinct 2. The final infrastructure development plan for the Elmdale RV Park on Elmdale Road North in Precinct 2. The preliminary plan was approved.
This is a commissioners meeting, and they already came in. So a lot of the times when you do entitlements, you need preliminary approvals, which means you meet with the engineering, you do an initial meeting, you go through it, you set up an initial draft, you work with the county's engineers, and you have an engineer of record. So you have Now this, I'm sure this firm didn't even use an attorney because they would have been present here. I didn't sense any friction, but these four guys are so bored, they're clicking their pens. You can hear them.
In court on August 12th, and the Cartesian Company and Park Group Construct.
Now you heard that Cartesian Company, we'll get into them. This company is out of Louisiana. You heard them say that it was preliminary hearing on the 12th, which means they didn't push it through. When I was early in land development and entitlements, I used to try to push. I'm in a hurry and everything. You want to be patient and let your engineers do the work, not you.
Group is the developer. All required documents and fees have been received. To break this down, there are 2,313 RV spots. It's a 146-acre park. The lot sizes are 24 feet by 55.
These are the smallest parcels you could ever build. 24 feet wide is attached row homes, and they have to be 110 feet wide. Typically, a D.R. Horton or a Ryan Homes, they would have at least 110 feet long. The minimum lot sizes are typically 3,000 square feet, depending on zoning and regulations and overlays. But because of Texas is very different for entitlements for mobile home parks compared to Florida, where we were looking at deals for the last 6 months. And you can hear these guys, he's just rolling it off the tongue. 2,300 trailers, we're just going to park them right here. What do you guys think? Now, you could do truck parking with this. You could do self-storage. You could do, for boat storage. There's all sorts. You could have done fueling centers out in the front. You could have done QSRs or what they call, individual pads for single tenant net lease, like a McDonald's. This is there's way better ways that you can develop than what this guy put together, but we'll keep watching.
And the pad sizes are 12 feet by 47 feet. The roads will meet the minimum requirements.
12 feet. A parking spot's 9 feet, just 3 feet wider.
As described.
And he said he's going to meet the minimum requirements. Nothing better, just the minimum.
In the requirements, utilities will come from Hamby Water and Taylor Electric, the sewer from the city of Abilene, and this will comply to fencing and screening required around the park. All RVs will be.
Now they're talking about a development plan. So traditionally a civil engineer would work. You would need a site plan. You need a ALTA survey, and we'll get into that in a sec here, but they're talking about screening. So some people don't want to look at a trailer park or an RV park. So now this isn't even what I would consider a well-designed one with a playgrounds and other things that people actually want. It's pretty simple. I'll show you the plan here in a sec.
Be required to be equipped with toilet and bathing facilities, and they will all comply with, or this park will comply with all ADA requirements. Stormwater prevention plans shall be developed and has been discussed with Commissioner Kendrick.
Stormwater will be. There's not even a full package here. When you look at the approvals and you download these, you can't even get, if you go to the hearings on here, it's only one page, one engineering page. And they still have they're getting the development plan approved before they spend and outlay the other ones. So the thresholds for this are very, very light.
And property, and I sat in on that meeting. Taxes are current on this property and all fees have been paid. Are there any questions from members of the court? And if there aren't, Jonathan Baum from Protect Hibbs and Todd's also here to answer any questions.
Thank you. And I understand if you can't answer this, but is it your understanding Commissioner Kendrick is satisfied with the plans and all?
Yes, he is. Okay. And
most small commissions like this only have one person that even understand it. There's a lot of people involved in planning, but in Texas it's different. There's not planning districts or overlays like there are in Florida or where I'm from in Ohio. So the county's home rule exemptions or home rule powers are a lot weaker in Texas. They're a lot more friendly with tech. There's non-disclosures for transfers. And so you just hear him. He's asking, so is everybody okay with this? This guy goes, yep, we are. So this is why you want good relationships. This is the only way. This is the only hearing you have to have.
I've sat in on several of the meetings as far as the planning on this goes, and he is satisfied with what has been discussed, and I think that this plan will meet everyone's satisfaction as far as public safety and the accessibility for the future of this park.
Okay, thank you. And I know we have Mr. Gregg here this morning. Again, did you have anything you wanted to say?
No, if there's any questions, I'm happy to answer, but thank you guys for the consideration.
He says, nope, go ahead and vote. And that means that he doesn't say anything. He's just listening. He's sitting down. You can see how relaxed he is. There's not pushy. There's not a podium. He's not getting up to oppose neighbors. That's what normal hearings look like. If you look at other, like Starwood Land acquired $800 million portfolio from Hines, and we looked at one of the assignments on one of the public hearings, it's massively opposed. They felt like they were being taken advantage of and lied to. They said, not this county, but in another one near, and they said, they sold us on this vision and now they're selling the properties and, that's not it. So when you come in, this is exactly what it looks like.
All right, thank you. All right. You said you had a motion. Is that right, Commissioner?
I will make the motion that this court approve the final infrastructure development plan for Elmdale RV Park, which is located in Precinct 2.
Second.
All right, thank you. We have a motion from Commissioner Statler and a second from Commissioner Williams to approve the final infrastructure development plan for the Elmdale RV Park located in Precinct 2. Any discussion from the court this time? Any from the public? Seeing none, we'll move on to a vote. All in favor of approving that final infrastructure development plan for Elmdale RV Park, please indicate by saying aye. Raise your hand. Aye. Any opposed? That motion passes 4-0.
Ms. Lewis, I have the Mylar, so.
Okay, so that's 3 minutes. Now, one of the things I would say is you heard that they recommended for approval when they started. They also gave the public a chance to speak. They had a preliminary hearing as well. So when you do developments, there was no public dedications. There's no kind of negotiations back and forth. There's no neighborhood groups or commissions. When you're looking through developments and looking at things like this, one of the biggest things is staying outside in unincorporated areas and providing your own utilities. That's the way that a lot of these groups have gone, especially for larger developments. The more acreage that you get, the better that it goes. So, the minimum acquisition would be 100 acres, in my opinion, for a park like this. And that's that matches the institutional interest of parks that we've seen already, like Sunrise Communities. So, let's take a look. This is the preliminary, okay, not fancy at all. You can see where it talks about if it's in a flood zone or not. Now one of the problems in Florida is the floodplain. This shows some of what's around there, if there is, right, and then how you get around it. This was the preliminary layout, which ended up changing big time. This is where they came in, and then they broke it up a little bit more. It was a little bit of a different layout. So this was the initial. They didn't even have the storm or anything, all right, and you can see how weak it is. This is like a preliminary hearing. This shows some of the developers, the Carson Company and Park Group Construction out of Louisiana. So these guys are cleaning up while guys like Hines and everybody else, I mean, they're doing fine, but, you don't have to spend $1 million on an attorney if you're buying out here. We're going to show you the final plan here. This is the final plan, which is much more robust. It has dumpster enclosures. It has everything from irrigation controls, water valves and faucets, gas meters, utility poles, traffic, mailboxes, everything, concrete driveway. This is the approach that they were talking about. I'm guessing they had to probably do a traffic study depending on the traffic counts. Depending on where you buy off the frontage, that's a big one. And again, this has zero amenities besides like some light ones. This isn't like the kind of park that an institution would do. You wouldn't see like this kind of density, I would say. There's a little bit of amenities here, but I think that you would see a little bit better designs. This is done by an engineering group. This is an IDP, Industrial Development Plan, of Elmdale, known as Elmsdale RV Park. Okay, now RV parks are seen more like hotels, and mobile home parks are more seen as like long-term. So mobile home park, manufactured home parks. So this is some of the engineers. You see this is a PE, and this is an all-in-one. Some of the others that went, your engineer would be meeting with these guys and work with them. All you do is write the check. You can see how close this is to the municipality, which is why sometimes, depending on the entitlements, you'd have to look closely at it. But this is outside the jurisdiction of the city, which gives you a lot. But it's also close enough where you can grab that. So a lot of the times, land selection, that's the biggest thing. Here's a tax certificate of the existing owner. This was agricultural. Assessed value, $350,000. And as soon as this was approved, look at the taxes, $80. As soon as this was approved, this is the secondary value. There was 2 small parcels, about 150 acres. As soon as this was approved, it was at least a $2 or $3 million delta on the exit. Easily. In 3 minutes, they made $2 million, right? Just through entitlements. And you could see how relaxed it was, okay? Now, what we would do is in Henderson County, our strategy would be 40 to 200 acres. If you look at where Henderson County is at, this is a lot closer to, it looks almost identical. So the one that they just went through is over here, Abilene. You could see how they developed it around a city like that. Now we've looked at some land up in here. You can see there's a lot of retirees. There's already water parks. There's already secondary homes from Dallas. This is like there's a lot of industry. Tyler, Texas is over here. There's already single family homes being built. It's not just a data center. There's a lot of manufacturing in Henderson County, and it also sits a little bit higher in the floodplain. We wouldn't buy something like this close. We would try to stay a little bit higher to stay out of the floodplain. When you look at engineering, you want to stay out of that area too, but this is like an example of, you can buy off frontages like this, but it doesn't ever hurt to really have this much land in the county like this, just because there's so much going on. Looking through here, keep it as one tract. That's exactly what they did. Build internal gravel or paved roads. That's what they did. Add private utilities, lease pads to RV, mobile home, or modular under one entity. No plat, no public process, and the minimum oversight. This avoids PIDs, MUDs, and MMDs. Now you're avoiding public finance. If you look at how long a development takes to get approved, it can be up to 3 years. This one was 60 days. What you can do. So you have to plan under the county. This is the county commissioner's court, which you just saw per government code chapter 232, which covers plats, roadways, and drainage standards, bonds. No city hearings needed if you're outside any ETJ, which is what we try to do. We try to stay outside of ETJs. I believe they were probably inside of an ETJ on the one that we just saw. Water and waste without an MUD. If you serve greater than 15 people, you have a public water, which means you're held under TCEQ. There's still grants and other things. It triggers engineering operations and other stuff. So if you're not going to tap in, that's up to you. On wastewater, you can do on-site septic, can work for large lots, but permits are required with soil. If you want a central private utility package plant, which depending, the cost gets so low as you grow. So if you do a bigger parks, in Florida, there's been 10,000 acres. There's been 5,000 home parks, 3,000 home parks, and they're a lot bigger. They're double wides. They're enough to accommodate double wides. So they're probably 30-foot wide lots by like 100, 110. And you see those all over in Titusville, Florida as well. How to make the capital stack. So you would do, I'm going to keep going because we're not all this, but you know, this is 100 pages of just research that we do just on one site. You want to confirm the ETJ that it's outside of it, do a pre-application with the county engineer, your engineering, you know what you want with your entitlements. This is what a group like ours would bring when we raise in a fund from accredited investors or qualified institutional buyers. This is the part that we're doing. We don't just go buy the land, we tie it up and fund the entitlements. You wouldn't finance the land. You would close on it and then negotiate with, there's no lot takedowns either. You record the plat, commission, vote, and surety. 60-day rules, trade-offs versus a public district. It's speed, fewer public votes, no special assessments on lots. You're going to carry more of the horizontal CapEx, but that's why you bring in a partner. Most capital stacks, they're going to bring 90% of the equity. They don't have a choice. You're going to just tell them, and I'll show you a term sheet here in a sec. Quick references, county subdivisions, that's the statutes that we're talking about, plat and bond. You didn't see any lawyers there. It was really laid back. They worked with the county and had pre-engineering meetings. PWS threshold is public water systems is greater than 15 connections or 25 people. OSSF permits and authority, TCEQ overview. Counties are going to enforce it. If it's private utilities, you can own that. And that's where this really adds up. If you're an infrastructure fund, you start to own the electricity, you own all those utilities and provide them. The larger that you go, if you master plan a community like this in phasing, you could do phase 1 and you have another 300 acres that you don't even touch, that you just keep as ag. And it's all added under a master plan, one titled mixed use district. So that's what the best attorneys would do if you hired an attorney and needed one, if you felt like you needed one. Texas Uniform Condominium Act. This is what I used to do in Ohio. This is urban and rural incorporated or unincorporated. This is how you get around a lot of these. Texas Property Code 82-001. Condominium as a form of ownership, not a form or physical construction. Each unit owner holds a fee simple title to a defined space. So if you still wanted to sell in it, you can do an unincorporated community or condominium plat. Because of that, the condo map is not a subdivision. There's one parent tract. Title remains uniform. Condominium and declaration and survey. That would be done by a surveyor and an attorney. You can do this for probably $10,000 or less. It's easy. Utilities and infrastructure would still be done. So each unit, it can be individually deeded in finance, which is a much better way of doing that. RV and mobile home community resort condominiums, common and hill country units sold as condo RV lots. Tiny homes and park models. Each model is a condo unit. Roads and utilities as common elements. Again, so you would put in some of those, but then you get money back as you start to sell interest in the development. Rural residential compounds, horizontal condos. Why developers use it? No county plat review. You record a deck, not a plat. That's chapter 232, and it doesn't apply. Saleable units. Each condo unit is legal fee simple. So this is a workaround so that you don't have to go back and you could sell individual fee simple leasehold interest and also charge management fees on it, which is a great way to make money. Future flexibility. Imagine 2,000 people paying you $50 a month. It's a lot of money. Key compliance. You must follow the decks, condominium decks, bylaws, survey, and floor plan certificate of substantial completion before the first sale. CEQ enforces wastewater, practical flow. Now, this could also pay for some of that. You can also make special assessments. And so if you want to put in a $500,000 playground, you can do that and have a vote and put and assess 2,000 different pads. Condo type unincorporated. Acquire raw tract, engineer utilities, almost what you just saw. Record a condominium deck, including units and condominium. Build private roads and utilities with no dedications. Sell or lease condo units with full ownership rights and operate under a condo association. What typical zoning use standards? Some counties do mobile home park or manufactured housing parks as a zoning district, not in unincorporated communities typically. It's an example in Trinidad and Henderson. Zoning ordinance snippet shows manufactured housing park M2, and that would be, depending on how you're doing it, key components you'll need to define zoning classification or special use. If it's a mobile home park, if not, lot and unit density and size, infrastructure standards, use and mix and allowable hybrids, ownership and lease model, county versus city ETJ. If it's outside of any city's ETJ, you're dealing mostly with county zoning. If the county even has zoning and the county has subdivision or plats. Some counties do not have zoning authority in unincorporated areas. For example, that Henderson County's subdivision rules and regs show the county administrative subdivision platting for unincorporated. That's if you plat. However, you can't find one for zoning districts. There are no zoning districts for RV parks or mobile home parks in Henderson's unincorporated zoning. It also sits higher than like areas like Houston, so you're going to avoid things like floodplains. Henderson, you might seek a conditional use permit or create an overlay zoning district, depending on what your zoning attorney talks to if you hire one. What I recommend, obtain a county ordinance, all these other things, okay. Texas baseline, most counties do not have general zoning power for unincorporated areas. Only a few very special ones have zoning overlays. If you're in a regular county, there's no county zoning district map to comply, which is why you saw an ag use get approved for an RV park just with an IDP. As long as you meet the health and safety environmental codes and you do site plans and permits, you heard what they said, and there's no zoning distinction between mobile home park, RV, or a hybrid. Zoning only if you're inside of an incorporated city or you're inside of an ETJ that has a subdivision or development review authority. Then the city or county would put some of these over you. So in zoning only, this is what we avoid now. This is how you lower entitlement risk as a fund. So is zoning the only issue? If you're in an unincorporated county without zoning, like most of rural Texas, no. Zoning isn't an issue at all. Mixed use or not, you can build a pure mobile home park or pure RV park or a hybrid under one site plan. And then after it's recorded, you can define the common elements and sell individual unit interest in the park. The key difference, Henderson County has no general zoning Is a hybrid allowed? Yes, absolutely. The approval is just like this. Commissioner's cards for permits only. Practical test. Is the tract inside of the city limits or in an ETJ? Does the county list a zoning or land use ordinance as it is the city in an ETJ? Texas's largest projects. This is what we found. Elmdale RV Park. Now look at the track record of Texas when it comes to this. Elmdale, 2,300 pads on 148 acres, unincorporated. Taylor County Infrastructure Plan approved. Yes, they had a commission hearing and it was approved. Final infrastructure plan cleared in September. Abilene, 2 extended stay RV parks. Multi-site city approvals inside the city of Abilene. Yes, city deliberations reported, residents spoke. You could still speak. You heard them call that, but it still didn't work. Midland, vacation RV park near Horseshoe Pavilion, 16 acres inside the city of Midland. Yes, approved, unanimous. Richland Chambers RV Resort, Navarro County, large resort. Pad count not stated. Unincorporated Navarro County, TCEQ, WWTP permit process. Environmental not zoning, approved. Yes, public hearing. Path, WWTP advanced, WWTP admin package on file, local zoning not required in county. Travis County, Hamilton Pool RV proposal, Stagecoach Ranch Road, large rural RV park, pad count not provided. Unincorporated Travis County regulates RV special provision, approved. Commission's court, spent a full morning on it, pending on-time report. Fredericksburg area KOA, large regional KOA, pad count not provided, typically County unincorporated city ETJ coordination. Approved. Yes. Commissioner's court action. This shows that there are very large new parks. Elmdale is huge, probably the largest in Texas in the last 10 years. Even when it's not inside of the city, there is a hearing, but it's usually the county level. And cities, RV parks are treated as zone land use. You'll have a different type of entitlement. And if you tap into public utilities, you could be asked to annex in, and there's all sorts of it. So it depends on what you're asking for. If you want scale and speed with fewer process, then your model would be unincorporated private control, how Elmdale did it. But they still didn't do everything that you can. They didn't do even close to any of the levers that you can pull doing entitlements. For Seward Resorts, expect TCEQ, WWTP hearings and notice. That's public. Then we talked about private utilities and the costs. Water, private wells, very easy to build. Small private well systems, 100 pads. When you get over 1,000, the price is almost negligible. Wastewater, same thing. When you get over that, the prices become negligible. The total private utility systems for wells, water, wastewater, electric and telecom, and drainage, $3,000 to $4,000 a pad. When you're inside of the city, it's much more expensive. Compared to the public utility model, this is the difference. Private systems are 3 to 6 months. It's faster than that. Capital sources, developer equity or private debt, TCEQ, ops reporting. Remember, this is recoverable too if you do condominiums. So per pad cost, what they do in Florida is put in big gates and kind of protect it. So you haven't seen the kinds of developments that you have seen in Florida for 30 years. Why this model is scaling: technology, regulatory climate, supports decentralized private capital. Private debt markets fund these easily with NOI-based underwriting. Pads are recurring revenue. You guys just saw that, $600 a month to bring your RV. I used to do nationwide demolition for 20 different states. I had a superintendent that drove his trailer and he just parked it. He would normally do it in the parking lot. In this example, if he's working on the data center, he can just park right there and spend $600 a month. And the company's definitely going to be paying for that. Scale economics, you can see here. From 250 pads up to 10,000 pads, it drops to almost in half. So depending on how many pads you get and how you break it up, it becomes better. That's why the minimums are 100 acres from some of the big REITs and institutions, which is our minimum as well. How private systems actually support that: deep well systems tied together, loop private mains, dual 1 to 2 mega-gallon storage tanks can be owned by investor IOUs. This is where the real money comes in. When you own all that, when you own the utility companies, when you own the solar, everything. Like Babcock Ranch in Florida, absolutely cleaned up. When you look at 5 or 6 of the big master plan communities, this is the way to do it. But no one's really doing it for mobile home parks yet. Permitting pass, we already talked about. Practical considerations, financial leverage, we already talked about. Okay, sizing reality checks. We were talking about how much you need based on the electricity, cost ballparks. This is the infrastructure. And then we talked about wind and solar. I was just doing a little bit of research. This is what that pad looked like. Let's see what else here. So you could see here, this was the technicalities of it. 3 phases, 1, 2, 3. They did phasing, which is common because they tested out. It lowers risk, very common. There was only 1 sheet. You guys saw it. Normally there's 7, and it said 1 of 7, but they never finished them. So their scope is probably 7 pages, but they didn't get that required. It was dated the 17th. There was nothing else provided. You have a central amenity spine, 3 subsections, detention ponds, typical RV pad layouts. Done by N Pro Tech, Hibbs and Todd for Elmdale Development. 16 units an acre. This was ag use, appraisal ag exempt. There's going to be a rollback. 95% of it was on the larger parcel, and then there was a smaller parcel that was another 8 acres that they grabbed. 146 acres. I'm sure they had it tied up before they transferred it. They were waiting on the infrastructure development plan, IDP. I think they even, they had it right. Infrastructure development plan. Here's the PE that did it. Okay. You have the developer, jurisdiction, plat type, implications. This was approved as an IDP for recreational. So could you do a modification? This is for temporary occupancy, but there isn't really, this is under subdivision regulations. But again, you can define your own under condominium laws later on. And if you record that, you can do amendments. There's so many opportunities depending if you work with the best land use attorneys. Amended infrastructure plan. If you wanted to pivot to hybrid and add mobile manufactured housing, you would just amend that, an amended infrastructure development plan or replat, and you would change the spacing to wider. It would be a lower density, and you'd probably have to go a little bit longer too. I would say you'd be like between 6 and 8 an acre. Here's the difference. Cities of greater than 100,000, Abilene has 125,000, have a 5-mile ETJ beyond their corporate limits. Any plat must be approved by both city and county unless there's a development agreement or interlocal delegation. This site sits inside of that. But the subdivision ordinance allows Taylor County to handle it if the tract stays on rural water. So you see there that if you tap into the city, because it only provides sewer, it reviewed the plan but did not assert full plat control. So traditionally they're going to defer. There's none. ETJ gives Abilene no zoning power. Now, if you're outside of that ETJ, no one has any kind of zoning power. And if you tap into private utilities or generate your own, there's literally no power that anyone has. If you want to annex in, that's what they're saying. Eligible for annexation if the city ever extends limits. If you tap into cities, they can require you to do that as well. It retains sewer oversight in future annexation. So if they were pushing you to annex in, you could also avoid that by providing your own utilities on the site. Now, what we would do is, when you look at this, and if you look at the 2 different types of, if this was a manufactured home or blended, the tenancy type, an RV park is short-term, daily, weekly, or monthly. A manufactured home park is a long-term. That's a tenant or homeowner. They might also own the land too, depending on how you're doing it, or it might be a hybrid. You might try to sell the land out over time. The cap rate range, as a developer sponsor in GP, you get to do whatever you want. The cap rate range of these is expected to be higher because of the risk. Revenue per pad, $700 to $1,200. You saw $650 over there. So they did this kind of zoning, but they're leasing it on a long-term month-to-month for job housing. If you look at the cap rates of a manufactured home park, it's a lot lower because of the stability and occupancy. The revenue stacks and operating expense are much lower. This is seasonal and transient, which is why we focus on a more robust county like Henderson. Although this is a really strong, that data center will be there for years. It'll take years to build that. We had a data center in Ohio. It was a 7-year project, $20 billion. Management, intensities, daily check-ins, reservations, and maintenance. This is minimal, mostly rent. Financing terms. It's harder for an RV park, and it's easier for this because of REITs, which is why a lot of these guys use lines of credits and just use credit lines to do that, which is why I'll show you a term sheet. We would never take anything besides what we would offer. You get to call the shots as a GP. Anybody would take these deals. Gross yield on cost, 12 to 18%. This one's 8 to 12. Cash flow economics. Revenue per pad looks good. 15 to 2,700 per month, but you just saw what happened. They had to lease it by the month. Effective annual rents could be 7 to 1,200. So if they're getting this and the occupancy rates are higher, it depends. But you saw it's literally nothing. Mobile home parks might be a little bit lower, but occupancy is 90 to 99% year round. Tenants own their homes, extremely low turnover, and they stay there. Net margins are a lot higher. At a similar cost per pad, RV yields a higher cash flow but higher volatility, just like a hotel. So do you want to own a hotel or do you want to own apartments? A lot of the best ones do joint now. They do the RVs or they would do 60-40. So the stability is better. Sun Communities, UMH, RHP, Equity Lifestyle, they pay 5.5 to 6.5 for parks, 8.5 for RV parks. So they're the ones that would come in and cash you out. I would never sell because it's stupid. 1 million NOI on a 6 cap is 16 million. Hybrid strategy, concrete pads with dual hookups. The smartest developers are doing RV ready, give you the fast payback in the early years and stabilized yield later on. This is exactly how UMH and Sun Communities are repositioning. Sun Communities just unloaded all their marinas and they're getting ready to develop. They don't even pick their phones up when we try to talk to them, which is why we raise capital and do it on our own. The highest immediate cash flow is the RV park, but the most stable is mobile home park. The institutional exits for mobile home park, faster permitting is an RV park, best hybrids both. Bottom line, they can out-earn them on cash, but mobile home parks compound more. If you compare Taylor County to Henderson County, the population, 144,000, Henderson's 83, still developing. Population growth is slower. Dallas it's 12% right here. Dallas-Fort Worth commuter fringe, 70 minutes east. You also have Tyler, Texas to the east. Regional hub like this, just a small little city. Economic drivers are an Air Force Base, health, Abilene. This is retirees, trades. There's also manufacturing, workforce housing, lake second homes. Plus, there's also all sorts, right? It's a lot better. Flat and prairie base, larger parcels, rolling trains, lakes, scattered subdivisions, heavier water control. But we still are in pretty good shape. Takeaway, this is better for industrial. I disagree, but Henderson's good for commuters. There's still tons of manufacturing. Entitlement, almost identical. ETJ, Abilene, Athens, ETJ smaller. It's a little bit easier over here. Numerous small water pathways. Where we're focused is in this entire central area in the Texas Triangle, where you see Waco. Some of the fastest growing mobile home shipments are to the north. It's Conroe, it's up here. It's the south side of Austin down here. Some of the fastest growing ones are right down here in Austin, Texas. I just talked to a guy over there. All in here. These are the best areas right now for developments for these types of parks. There's about probably 15 counties that you could look at. Value creation, stabilized value. The cost to develop one of these with developments, we would estimate, this is what a development budget would look like. Actually, we're just going to do the term sheet, okay? Because I'm running out of time. So this says horizontal land partners, the developer. This is what we would send to a REIT and say, here you go. Take it or leave it. Or come back and negotiate. Talk to your lawyers. Horizontal land partners, 100-acre manufactured housing and RV park. That's a mixed use. Henderson County, unincorporated outside of ETJ. You know, a REIT isn't calling the shots unless they're stroking big checks and backing you. If you're the developer, you get to do whatever you want. If you're flying out and going to the meetings and talking to the engineering and designing everything, then you're taking the risk, which is why if I did this any better, I would lower the risk. I would try to break it up into phases. I would look at being able to exit through a resale. I'm looking at how fast can I recoup my cash. You don't want to just be tied to one asset. You know, the more that you can split it up, the better. If you look at 4-star, individually platted, or individual leasehold interest is one of the best ways to recoup. The project will include all horizontal infrastructure, pad installation, utility systems. Developer will raise initial equity. That's what we're doing to secure an option, complete full engineering, and achieve county entitlement within 90 days following entitlement. A large REIT will provide 100% of capitalization. You better bet they're going to stroke a check because they're worth billions. Why wouldn't they? Project summary, 100 acres, mixed-use manufacturing and an RV park, 800 pads, unincorporated Henderson County, county IDP approval required only. utilities, water, or you can do private, full infrastructure, road, utilities, pads, clubhouse. 90 days of full IDP approval, 12 months of full build out. I would say faster than that, except with the water system. So the other one that you just saw, they're tapping into public utilities, which allowed them to move it up. But if you move this quick enough, you're going to go way faster. Senior construction loan, 0%. REITs bring in all cash. Not a doubt in my mind they would take that. REIT equity, 90%. This is a 90-10. Developer equity, $3 million for the land, plus that, and you get an acquisition fee. Developer's role is 5% of project capitalization, $1.5 million, payable at REIT at closing in lieu of broker commission. So we do unrepresented opportunities. We don't need brokers. We absolutely don't need a 3% person representing our fund. That's for sure. We take that as an acquisition fee. Development and management fee, construction and CM fees, 4% of horizontal hard costs, 1.5% of that. Assets and operations management, 3% of gross revenue doing lease up. Profit participation, 10% equity and interest, 70-30 split above, 12% IRR hurdle to REIT. Developers retain right to roll equity into stabilized hold or sale. So we would probably also carve out some commercial spaces and just say, hey, you guys can have the park, and we want to participate. Developer will raise $1 to $1.5 million of working capital to secure the 90-day option on the land, non-refundable plus extensions, fund survey engineering and IDP entitlements. That's probably $200,000 at the most. And then you would close on the site more than likely. We would always over-raise to be able to close on the site. So we would probably raise $2 million at a minimum. So we call that a tranche, which means we would say, hey, we need to raise a minimum $2 million so that we can go to market and tie the land up and get started. The working and close on the site, you always have to do that. All these funds are just middlemen. All these guys and equity guys that say they're guys are just a bunch of middlemen. You can go directly to the funds. You don't need anybody. You can read the financial statements of any of these REITs. They all have joint venture agreements, and it talks about those. You can already look up some of the terms that they've accepted in the past. The REIT would absolutely fund 100% of the construction developer's cash, acquire the entitled land. They could also do it with their own credit lines. Who cares how they do it? They would buy it from the developer's fund, or we would assign it through a third-party appraisal, executed development agreement. The return summaries. Now, these aren't exact. There's acquisition fees, entitlement, and uplift gain. Remember, the second that you get that approved, that 4 minutes that we just watched, they made $3 million, $2 to $3 million easily. So this is where we take our money. You don't have a choice. We did it. We took the risk. There's a million people I can go to. You're not the only people with a little bit of cash. Okay, and a lot of these, like, you're paying cash for the land. Why would I need them? I have a year. I can sit on the land for as long as I want. I can make it truck parking. Development and CM fees. And that's why if you put an overlay on it with a manufacturer mixed-use industrial district, you have a very amazing overlay. If you could look at larger parks, like 500 acres to 1,000, that's typically what they do. They put an overlay of M1 or M2, and that allows you very flexible zoning, and they can never change it. You're just amending the master plan. You already have the overlay that protects you. Asset management fees and key distinctions. Okay, now, here is what it would look like if with stabilization. Okay, so we talked about some of the capitalization, stabilized performances. Here we go. Total pads, 95%, years 2 to 3, $650 per lot, $6 million to $6.2 million in gross revenue. OpEx is $2 million, $4 million. At a 7 cap is $57 to $60 million in stabilized value. That has nothing to do. It doesn't even bring in some of the other things that we talked about, like if I partner with a gas station or a national expansion firm. There's a million people that we could talk to, that like fueling centers that would eat this up in a second, depending on where your frontages are at. That's why you want traffic counts and you want to find a piece of land in the right area. The total cost of development, about $30 million. Stabilized value, $57 to $60. The uplift is $27 to $30 million. Implied gross equity multiple, 2x on total capital. That's unlevered. REIT target IRR, 13 to 14% net. Developer IRR after fees and promote, 25 to 30% on contributed value. Long-term ownership, that's us. You get to negotiate all up front. $57 million. LP is going to get 51. Developer's going to get 5.7. Retains 5 to 6 residual interest, 5 to 6 million. Upside, this is best case on a 6.5. It would be 8 to 9. Reflects promote and other ones. Developer controls 10% of stabilized asset. We would carve out and actually try to get full rights to some of the pads in the front, plus probably some of the utilities and infrastructure, depending if you did energy deals or you had a solar park or anything like that. And again, a private solar park is unregulated. It doesn't go to ERCOT. You're not tapping into the grid. So you just do your own deal. Milestones is a land option execution. This would be like an example. November, 90 days to engineering and IDP approval. REIT term sheets and execution closing Q1 2026. Construction starts Q2. Complete stabilization. This shows the developer returns $3 million at closing. They would have to close when you get approvals. They don't have a choice. The acquisition fees, again, not perfect, but it would probably be less than this, but you better bet they're going to pay you back. You have dev and CM fees, asset management fees, promote and residual equity, promoted projected returns, 10 to 14 million, which is 45% on the equity multiple, which is just amazing. The governance, REIT maintains consent on budget capital, developer retains control on design and contractor selection, daily operations. Mutual RFO. This project presents a 100-acre, fully engineered manufactured housing and RV community in Henderson County with a total development of $30 million and stabilized value of $60 million. Horizontal Land Partners, which is one of our trade names, our Gulf Coast Equity Fund, contributes land engineering and execution, unmatched in the market, receives 5%, and absolutely we're going to get 10% in the market. So that is how that works. If you guys have never worked on a development, this is how you do it. That's a full budget, and this is for our potential partners. This is exactly what we're looking for, and this is why we raise and why someone would write, why a family office would write a $2 to $5 million check, because it covers a whole deal. A lot of funds don't want to invest in a fund of funds, which is not what we are. We are not a fund of funds. I don't put my funds with other funds. We are an operator. We are an entitlement group. You saw that land was worth $300K, and that was the assessed ag value. They didn't rezone it. They probably got at least a 5X in 4 minutes. I would actually estimate it a little bit closer to 10, but that is just based on my experience and appraisal, subject to other ones. This is the value creation, long-term ownership, and all the other ones. So if you guys want to check us out, we are looking to invest in America's working class, the world's most stable asset class, institutional capital light housing. This talks about our strategy. This is one of the main ones that we're looking at. You can look at my information down here in the footer. Right here, my name is Rob with HLP Fund. If you guys want to check out our Crunchbase profile, I'm going to show you. We're going to go HLP Fund or Gulf Coast Equity Fund. This is our press announcements for our raises. This is on our site. Here's our raise. So this is institutional private fund investing in capital light housing and essential land across the Gulf Coast and Southeast, based out of Miami. Our website, my LinkedIn, all the different buckets that we touch. Commercial real estate, you saw that by doing mixed use. Finance, you can see all the underwriting, capital stacks, structured finance that we're doing. Hedge funds, investing in options and creating futures contracts, also working with public finance vehicles and other ones. You're creating opportunities for that. Infrastructure, you saw that. You're putting in underground utilities, HDPEs, property development, prop tech. We use proprietary fintech and prop tech. A lot of these firms like Cavco are vertically integrated, and they are selling and owning the financial structures. We've shown some of those. We plan to have probably split the prop and fintech off. The real estate, you just saw it. Real estate investment, you just saw it. Manufactured housing, modular housing, financial services, asset management, and all of the other ones. REIT and private equity, easily. You can see some of our press releases on here. You can see our factory-built housing in here. And then just because of the buckets that we touch, you can see some of the groups that they're putting us under. Real estate investments with fewer than 100 employees. You can see the main, and you can see some of our press here. So if you guys, I would encourage you to visit this out. I would encourage you to visit our site. I would encourage you to visit our YouTube channel. If you're not, that's where I put these types of video, the full uploads. I will show you guys our YouTube channel here. This is it. This is our YouTube channel. And this is our raise. We talk about accredited investors only, next generation goals co-equity. We talk about some of these, and then we have a lot of shorts that break these up into bite-sized pieces. Cavco, how Warren Buffett's investing. You know, Warren Buffett owns Clayton Homes, and he has a lot of other ones. We have some features about Sun Communities stock, what it would have looked like if you just owned the stock. Cavco has done a lot better. Investment strategies. We talked about the advantages of manufactured and mobile homes compared to traditional housing. We talked about Clayton Homes. We've talked about Texas mobile home markets and the market overview. We've talked about the housing stats and affordability. We've talked about Pulte and build to rent, BTR. You know, again, lots of easy ones. We've talked a little bit about Mississippi. We talked about fueling stations like Buc-ee's expanding, Texas versus California for logistics. We've talked about wholesales. We talked about the blue, you know, investing in those, tech multiples and compressions. We've talked about Ohio a little bit and some of the other ones. So lots and lots and lots of digestible bite-sized pieces on our channel, and just started it. And again, we thank you so much for watching. Looking forward to working with all of the capital sources that plan. This is going to be probably our best video. Remember, this is, if you want to get a copy of this infrastructure plan, please reach out. I would be happy to show it to you. We plan to send out emails to some strategic groups that we're working with, but this is the infrastructure development plan. You can see the densities. You can see how they're labeled. And it rolled off the tongue like it was nothing. And they numbered these by phases. So this is how traditional subdivisions are built as well, or master planned communities. This density is a little bit bigger. This is called a hammerhead that allows them to pull in. They have a bus stop for a shuttle in case they're doing other ones. So these are great. It just allows for a lot of space. 40 feet is, you can see the minimums here. This meets about the minimums, 30 feet, and these are gravel roads down in here. I don't think it looks like this. I think this is a nice way to put it. I don't think they've paid the roads yet. They're probably opening up the minimum so that they can start cash flowing. Thank you so much for joining. Again, my name is Rob with Horizontal Land Partners, Gulf Coast Equity Fund. And if you are an accredited investor and you want to see the vault, or you want to hop on a call, please book a call or feel free to call me in the footer.